Hello everyone, my name is Elona Fejzaj and I am a lecturer at the Agricultural University of Tirana, and the paper I'm going to present with Albana, Gjoni and Fjorela Bregu as co-authors is the development of insurance market in Albania. A short abstract: the insurance market is of great importance in the development of society because its sustainability as a financial market is vital for the economy. Insurance plays an important role in risk management, and they have the role of protecting the individuals and the economy in general. The purpose of this paper is to study and measure the level of competitiveness in the insurance market, as well as to show how vital the latter is for the development of the insurance market. Based on this level, we define the features of the market as a market in competition, a monopolistic competition, a oligopole or monopoly. In addition to the theoretical treatment, the impact of GDP per capita and the level of concentration of the three largest companies in the insurance market in Albania on the total insurance premium will be studied. The right selection of the model and its testing is one of the most delicate links in the situation analysis process. The analysis underlined that premium, GDP per capita and the level of concentration show a positive correlation between them. A small literature review: the features that differentiate this market from other markets, as well as the reasons that lead to its regulation, have to do with the asymmetry of information, which means that the insurance has difficulty understanding complicated insurance contracts and lacks the ability to assess the proportionality of their risk premium. So, two factors influencing the information asymmetry are bad choice and moral risk. Bad selection represents a problem of asymmetric information that occurs before the transaction occurs. Moral risk is about changing the behavior of the insurant after buying the insurance policy. But the main reason for the need to regulate the insurance market is a basic feature of this market: the necessity of a high level of financial stability due to the long-tail nature of insurance products. Methodology of the study: concentration within an industry can be defined as a degree to which a small numbers of firms make up the total output in the market. The value of top firms can be 3 or a maximum of 5. We are going to calculate an index for market concentration, that is Herfindahl-Hirschman index. This index is calculated by adding the square root of the market share of each individual firm in the industry. Concentrations in the insurance market lead to rising prices. Analysis of results of the empirical model. The method used in the study on regulation and concentration in the competitive insurance market in Albania consists in the processing of secondary data for the period 2002 till 2018, obtained on the official website of Instat Bank of Albania, relevant insurance companies, and their processing using the econometric model in the electronic system e-views. So we are going to obtain data regarding non-life insurance companies operating in the insurance market for a period of about 18 years. The model we achieve is the model below. Premium is depending on some variable and dependent and independent variables, and is a multiple regression model. Premium represents dependent variable and shows the level of premium for non-life insurance policies sold in years, while independent variables are C3 represents the level of concentration of 3 companies in the market for premiums. GDP per capita indicates the level of per capita income. T indicates the years taken in the analysis, while B0, B1 and B2 are the regression parameters that link the mean value of the dependent variable to the independent variables, otherwise called coefficient, where we contain all unobserved variables that affect the premium level. At the end of the econometric analysis, we want to discover the relationship that exists between GDP per capita, CR3 and the premium for non-life insurance companies in conditions where other factors are taken as unchanged. To enable this model, several tests have been performed, as we can see in the next slides. And we have here the analysis of the empirical model following all tables, all statistical tests that we have been testing to show that the model is statistically valuable. The conclusions we draw from the use of the empirical model are: we used the functional form test and found that the model in the form of Loglog is the best model to do the analysis of the variables that we took in the study. We used the normality test to see that the residues also have normal distribution. We used the chow test and saw that the model is stable and does not change throughout the period we have been studying. The model does not suffer from multicollinearity. The test showed that there is no close linear relationship between the explanatory variables. The model does not suffer from heteroscedasticity, so the standard errors of a variable monitored over a period of time are constant. The final model is a Loglog model, and it turns out that the variance of the premium variable is explained 65% of the variables used in the estimated regression. Also, both coefficients have the theoretically predicted sign and are statistically significant. An increase of GDP per capita by 1% will lead to an increase in the growth rate of the premium by 0.7% in conditions when other factors are taken as unchanged. Also, an increase of 1% of the growth rate of the market concentration will lead to an increase in the premium growth rate by 0.38% in conditions when other factors are taken as unchanged. Conclusion and recommendations from the study of concepts taken from the literature in relation to this paper. We are reaching the following conclusions. Regulation for the insurance market arises as a need for asymmetry of information that exists in this market. The two problems that arise from information asymmetry in the insurance market are bad choice and moral risk. Competition in the insurance market, although considered by most as vital for the performance of the insurance market, there are also those studies that qualify competition with a negative impact on this market. Positive views regarding competition for the insurance market are the competition process ensures that premiums are almost the same over time. The level of concentrations of the 3 to 5 largest companies in the insurance market gives features to this market. The insurance market in Albania had its beginnings on the 31st of July 1991. It has been first monopolistic, then oligopoly market. The insurance market in Albania operates mainly as a result of the income generated by compulsory insurance, with the main product being the motor. The problems of the insurance market in Albania are lack of information regarding insurance, lack of education to be insured, high level of compulsory insurance compared to voluntary insurance, fierce competition and low level of income. Compared to the countries of the Western Balkans, Albania has the smallest number of non-life insurance companies. There are only 11 companies operating in the insurance market in Albania. 8 of them belong to non-life insurance and 3 of them are life insurance. The characteristics of the insurance market in our country, based on the measurement of the level of concentration by means of the Hifindel index, are those of an oligopolistic market. However, the comparison of our country's insurance with European Union countries shows the level of competitiveness of this market in Albania, which is still not at satisfactory levels, as there is still work to be done. Historically lower interest rates, financial markets which are volatile, and low GDP growth are negatively impacting the insurance industry profit margin. And that is all. Thank you.